Okay, folks, we are live. Let me try and fix this. What did I do here? What did I do? That's not what I want. What did you do to me here? I just want to share my screen. I am sharing my screen. That was the image. Okay. That's not what I want. That's not what I want. You son of a bitch. There we go. Okay, folks, sorry about that. All right, so we have the Fed chair over in Jackson Hole, Wyoming, giving his speech. And we're going to talk about what the markets are saying is going on with the economy, not what Jay Powell is saying going on with the economy, although he was fairly on point. I think it was a pretty good speech. Clearly, he was dovish. So that'll take the heat off of him from the president for the meantime. But what are the markets telling us? Well, right now, you're looking at the yield curve. If you take a look at the twos versus tens, the twos are dropping much more than the 10-year. That means the yield curve is steepening, not what the Fed chair wants, but at least longer term bond yields are not moving up higher. Now, when we take a look at the probability of a rate cut going out to, man, this has been changing all morning long. This was down in the 70s, a move in September. That was down in the 70s, the probability of an ease. It was up above 90 only a few minutes ago. Now it's down to 89.2. They're going to go. They're going to cut rates. I think this is going to get locked in. It's pretty much a foregone conclusion that the Federal Reserve is going to cut rates. Now, that's what they're going to do on the headline. What they're not talking about behind the scenes is what's going on with the Federal Reserve's balance sheet. And this could be the reason why you're seeing the longer term yields with such volatility, because when you take a look at what they did this past week, they rolled off a lot of debt off of their balance sheet, like around $30 billion off of their balance sheet, maybe a little bit less than that. That's a lot. So the Federal Reserve continues to roll off debt off their balance sheet, all the while they are tipping their hat towards a rate cut. So this could keep a bid, if they keep doing this, could keep a bid under longer term yields. Not that we're seeing that today. Now, as far as multiples go, this is not going to get updated until after the close, I believe. But we're going to probably close out the week at not all-time record highs, the second highest valuation since the dot-com bubble. Now, we don't know how the market's going to close, but we have a pretty good vibe for how it's going to close on the day. Now, say hello to folks. George, welcome. Talon, welcome. Now, as we take a look at some sentiment indicators, uh, bullish percent index on a weekly time frame, we were down, we are now up. So you have optimism. High yield debt, we were down. We are now up on the week. Bullish reversal bar, very powerful move on high yield debt. This is very bullish for equities. TLT, bond prices moving up. I got to say, I'm kind of surprised at this. This is a breakout if we close here. The 10-year yield. Now, the 10-year yield, this is a daily time frame. This is a break of support. This is the second failure to hold 4.3 on the 10-year in the past several days. So this is a very porous support / resistance level on the 10-year yield. What my interpretation of this is that this is a resounding vote on the U.S. economy that it is slowing, probably more so than what we think. There's your downtrend channel. So it looks as though yields could quite possibly break lower here. And again, the way we need to interpret that is that the economy is slowing. That gives the wiggle room for the Fed chair to cut rates. Taking a look at the 30-year bond price, we have a bearish reversal bar. We broke out last week on the 30-year yield. Now, you know, if we manage to hold the opening price of last week, the lower end of this body, that would be a retest of the breakout point, and we hold it, we get follow through. That's exactly what the Fed chair does not want. That the president does not want that. And I keep repeating this, but we need to go back nearly a year now. It's been a year since the Federal Reserve last did a 50 basis point cut. Long-term yields are higher now than where they were back then. That's not what was intended. They wanted longer-term yields down to free up the housing market. They didn't get that. Yields went up. This is not updated. We already went over the yield curve. I think one of the most interesting charts out there today, and one that speaks absolute volumes about what, if anything, is a threat to this market, and that is inflation. What you're looking at here is the TIPS, Treasury Inflation Protected Securities. This is a massive move. This is a massive breakout. We are at now multi-year highs. Let's go monthly chart. I don't even know. The prior all-time high was at 113.88 last seen back in 2021. Folks, inflation was in fuego. You had cheap money. You had inflation on the rise, too few goods, too much money chasing those few goods, and tips were on fire. Guess what? They're breaking out of a massive break at current. And we could quite possibly be taking out those highs very, very soon. So what does that mean for the overall markets? Let's do an overlay. Let's get curious. Let's overlay. Let's overlay the S&P 500. We'll put it above. We'll make it a lovely shade of blue. I thought I clicked blue. I guess I didn't. So when you get the threat of inflation, S&P 500 overlaid here in black, we'll take it. When you get too much inflation, things get to be real fast, and the equity markets can roll over. And simultaneously, at around that time, both the tips and the S&P 500 both began to roll over, probably due to the fact that the Federal Reserve went into a rate hike mode. The dollar, this looks like a train wreck in motion. I've been saying for the longest time that I think that the Federal Reserve was going to sacrifice the US dollar and let inflation run hot. The government's going to be good with that because they're going to pay back our debt with cheap, worthless dollars. And the rest of the world gets a short end of the stick. We kind of get a break because it's a semi-default on our debt by paying back with cheaper dollars. So this is a horrible break for the US dollar. Let's go to a weekly view to get a vibe. This is a big bearish reversal bar. I think it's quite possible now that we've gone into a new rate cut regime that the dollar breaks lower. And I've already looked at the euro and yen. They're going up. XRP, bullish reversal bar. I'll probably be adding more to this by the end of business today. Bitcoin catching a bid here, up 3.77%. Both of these big bullish reversal bars. We don't know if they're going to close there, but the probability is very strong that they will. Volatility getting taken to the woodshed. Just off of session lows, but at support. The percentage of stocks trading above their 50-day moving average on the NASDAQ 100, now back above 54. We were at 45 last night. Only 45 companies were trading above their 50-day moving average on the NASDAQ 100. So, and this is off of the highs of the day. I don't know if they can let me do hourly here. I guess they can. You can see how we were higher early. We were up as high as 58, but now we're fading. Dow Jones Industrial Average, all-time record highs. The Dow Transports. We had a breakdown a few days ago. New higher highs. We're trading off the highs after hitting resistance. We'll see how we close here. Now, speaking of the transports, I did a commentary last night, a video commentary. I don't think I could link to it at the back of a live stream, but it's on YouTube, on UPS. Let's go to UPS. And I received feedback that I was too negative on UPS stock, and clearly the individual who sent me that message did not view the entire video, because I was bullish. I was suggesting that the shares get bought. Ideally, if we were to do a pullback and a retest of around that $83 to $84 per share mark. If we manage to close above, let's bring up TrendSpider. If we manage to close above, what the hell is this? Here's UPS. Here is the, and it hit. It didn't quite hit. This is my support level that I was looking for. Didn't get hit. But let's go to a quarterly chart. If we manage, yeah, and I talked about this last night, we are trading back above quarterly support. We were down below this last night, and I said if we manage to close out the quarter back above, let's call it $89 a share, I would get more bullish, because we came close enough for government work to testing a major support level, and we have since bounced, recapturing a quarterly support level. I would be more aggressive with my buying. So UPS looking good here, long story short, assuming that we hold this support level at around $88, $89 a share. TLT, bull operations coming soon. I'm not ready for that yet. I'm not there yet in terms of bullishness on US debt. There's too much of it. There's too much of it. You have, again, I'm going to go back to this chart earlier. You have the Federal Reserve dumping treasuries. You have the US government that won't stop spending. You have a lot of supply out there. There's no indication that the Federal Reserve is going to do yield curve control, meaning what is yield curve control? They begin buying debt. That's when you see the balance sheet rise. They're not doing that right now. And there's no indication that they are going to do that. There's no indication from that speech they were going to do that from Jay Powell today. So I view the TLT is a very risky asset right now, not a clear path to coming into a new bull market. We'll review it over the weekend. We'll see how we close, and then we'll make the determination as to whether or not we want to get involved with it. Right now, no, not right now. Let's take a look at the S&P 500, up 1.62%. Can't talk much about volume right now, but we could certainly take a look at an intraday view of the S&P 500. And we're just off of session highs. We have resistance up at 648. So it's a strong day. It was great volume at the open, but it doesn't matter how we trade intraday. What matters is how we close. So I'm not ready to do anything right now until we see, is the quality of the close a strong one or a weak one? And one thing I haven't really, hammered away at is the question of what's changed. What's changed here? Is the U.S. economy improving? No. Are stocks cheap? No, they're not. Again, we are going to close out the week, all things being equal, meaning where we're going to trade at the close is where we're trading at now or better on the S&P 500. If we close above the October 2021 highs, that's the second highest valuation in history. And never has the Federal Reserve gone into a rate cut regime with equities this overvalued. So it's really a historical moment. And you have to ask yourself the question, are we about to make a charge for the dot-com bubble record highs? I think it's possible. Now, looking at the Qs, we had broken down only a few days ago. We didn't get the check back to retest support yesterday, but volume to the downside, it was above average yesterday, but it wasn't horrific. If we fail to hold, let's call it 566 on the day, that would be extremely bearish. Extremely bearish. But at this snapshot in time, the Qs are looking bullish. Are they extended like the S&P 500 relative to the third standard deviation Bollinger Band on the 30-minute chart? Yes. But it doesn't mean we can't trade sideways for an hour and then continue to move up higher. So would I short this? No. Mid caps on the precipice of a major breakout here. Clearly, if we're going to get these rate cuts, you want to be in mid caps, you want to be in small caps. Mid caps up just shy of 3%. You have the small caps up over 4%. The banks appear to be at 52-week highs, all-time highs, in fact, right? Right there. Regional banks. Remember, these regional banks carry a ton of commercial real estate debt on their balance sheet, and they're probably going to outperform the big money center banks because they're getting rate cuts, which reduces the risk of their debt that remains on their balance sheet. You're probably going to see less tweets about commercial real estate having been sold for $2 billion 10 years ago, now selling for 500 million. In today's dollars, massive cuts in commercial real estate value. So that gives these names a big breather. I would expect that these names are going to move up measurably higher. Biotech's looking good on the day. We're long of it. Technology looking good. They had a breakout point failure, meaning we had all-time record highs about a week ago. What are we doing now? Well, we're back down into this trading range. We have Stokes, just like on the Qs right now, Stokes trading down below 50. We know that rallies tend to fade. And the one takeaway I have about today's presser is that, you know, who didn't see this coming, right? We watch the Fed Watch tool every single day. I don't think it's a surprise to institutions that we're going to get a rate cut or a series of rate cuts. They've been announcing it on the Fed Watch tool this year, which we go over on Market Wrap every night. This has been saying we're gonna move up higher. Excuse me, they're going to see rate cuts. I was just read a comment from Talon, Boyle down 5%. In my mind, I was thinking Boyle's going to move up higher. Here's the comment. We're going to go over that chart in a minute, Talon. I'm sniffing opportunity there. We're going to go over on Boyle, which is a leveraged product for natural gas, which has been really beaten up. I want to go over on TrendSpider seasonality in a moment. Before we do that, let's talk about what energy is doing in terms of oil. This is not updated as of yet. Let's go to the USO. This is an end of day chart. USO. This is the ETF. Gap higher, fading off of its highs. I know the energy stocks are looking really, really good. We're long of FLNG. That's doing good. What are we up on the month here? I mean, we're up 7.14% on the month coming out of this massive, massive breakout. So the LNG plays are looking really good, really, really good. So I think that we're in a new macro bull market on at least Flex LNG. As for, I skipped Natty Gas. Let's go to Boyle. Let's go to TrendSpider for this one. It's a leverage product, so it's kind of where's my I don't like that view. Screw it. Let's keep it on. All right, so here's the weekly chart. I can't use this chart. It's so volatile and you get time decay. It's very hard to view it. Yeah, man, we've broken down through some real serious support levels. Let's bring up UNG rather than Boyle. It's too volatile. So this is better. It's going to show us a lot more support levels. And it's not a decaying product. So, yeah, I mean, this is still in a world of hurt. This is a monthly chart. You could see that this is the automated trend lines. You could see that this support level here is acted at current. It's about $8.54. There could be a lot more downside here for natural gas. I'm not a buyer here. I thought I would see something I liked here. I don't. It looks pretty ugly. Let's check out seasonality. Yeah, I mean, this is going back 18 years. We can pull up closer because we were in a big bear market on UNG for a while. Then we went into a small bull market. So we'll smooth this out by drilling down to a 10-year view. But you could see that August is not a great month, but the coming months, September, October, November, December, are pretty horrific as well. So in terms of a seasonality trade, I'd be looking at February at which to buy because April is the best month, and we grind up higher in terms of seasonality monthly time frame from February. Now, let's drill down just a 10-year view. You can see this changes a little bit, but not by much. I think the strategy holds true here in terms of a seasonality trade. You don't want to buy this right now. There's just there's no support below. There's uh, no seasonality angle to play here. So I would avoid natural gas right now. Avoid it. Let's check in with precious metals. I want to go over palladium as well. Let's go over GLD. GLD daily chart up 1.20%. Again, folks, dollar taking a dive, gold moving up, silver up 2.28%, ready to take out multi-year highs. Palladium up 2.42% after a nice pullback. We own this as well. We own all these: silver, gold, palladium, and I'm going to be buying more palladium today. So these names are telling us inflation is on the way. What should be a bit disturbing is that energy is weak. Granted, oil is up, but it's off the highs of the day. Natural gas is at record lows. So what is that telling you about demand? What is that telling you about the growth of the economy? I think it's telling you the same thing that the longer term yields are telling you, because they're taking a nosedive. The economy is slowing, and it's slowing rapidly. Mining stocks, Nugget, 52-week highs, multi-year highs, in fact. GDXJ, again, multi-year highs. Let's go back. Let's use the monthly chart, see where we're at relative to history. I mean, beautiful. We're going up higher. This is all saying inflation. Copper, you would think that copper would be on a tear today. It's up only 1/3%, and it's well off of its highs for the year. Dr. Copper is not saying there's global growth. It's saying, I'm weak, I'm sick. The global economy is sick. Emerging markets, dollar down, emerging markets up. Boeing looking good here. We're long of this. Looks like it's going to break out. UNH, we're long of this. Doing well today, 1.45%. CNC, we're long of this. Last tick, 29.53, up 2.5%. That $30 per share mark is a bit of an obstacle. So we have our position here. I'm not going to add any more. These are the healthcare stocks. Our energy play, EOG Resources, up 1.97%. It's flirting with the close above its 200-day moving average. We'll see how it closes. Too early to make that call. BHP Billiton. This is a materials play. It's saying anything that you could drop on your foot and it hurts, that's where you want to be. People want real stuff right now because they're afraid of inflation rearing its ugly head. Another healthcare stock up 2.76%. The banks, Morgan Stanley, getting ready to take out all-time highs. Coinbase getting ready to recapture support. If we close strong on Bitcoin, if we close above, let's call it 321 on Coinbase, I think it's a good trade to put on. CrowdStrike really beaten up here. I think that this is looking very attractive, assuming that we don't get a sell-off on the market today. We close at the highs of the day. Palantir, still extremely expensive, but if the Qs go up, so is Palantir. Intuit, they reported earnings apparently was not good, and they have been hammered. I'll research their report, see whether or not this is an opportunity. Tesla, looking very good here, up nearly 5% on the session. C3AI, ChatGPT, up 3 1/3%, looking good. I may be a buyer. Netflix, forming a nice base here at around 1,200. Looking bullish. I wouldn't be the least bit surprised to see a breakout. But given current valuations, folks, the rate cut news was a known. So would I be surprised if we just turn red on the day and break lower? No, I wouldn't, because we can't ignore the fact that that we could be facing a sell the news event. Is it rare to happen when you have a rate cut regime in front of you? Yes, it is. AppLovin. I did a video on this several weeks ago talking about this setup here, and great breakout. Altria, bearish reversal bar. Nobody wants to be in the staples right now. Amazon, nice bullish reversal bar, up 2.56%. Now it's all about follow through for these names. Do we get follow through? Do they close at the highs of the day? And do we get follow through to the upside? NVIDIA, flirting with a recapture of support. Microsoft was oversold, trading up on the day now by just shy of a percentage point. And that's the news. It's fit to print, folks. So bullish news on interest rates. The question is it too little, too late? And the market is going to tell us that. Clearly, the bond market, when you go back to TLT, is saying that they want a flight to safety trade and that yields are breaking lower. That's a concern about economic growth, slowing jobs. Fed chair spoke quite a bit about jobs being a concern and that GDP slowed dramatically over the past couple of quarters. So be careful here of potential volatility that rears its ugly head, because remember, the Fed Watch tool has been telling us for quite a while now they were expecting a rate cut in September. Is this a potential sell the news event? We'll find out in the next couple of days. Everybody have an awesome trading day. I'll talk to you soon, and be profitable. Take care.